Howdy. Welcome back to Dion Talk. Normally during the week when I do a live stream, I'm on the slides and on my phone, so I don't answer questions. The purpose of this live stream is going to be answer questions. This live stream will probably go on at least an hour or longer if the questions last. The thing I want to cover first to give people a chance to log in and realize that we're here and get your questions into the comment section is I want to talk about a strategy that I've used on half my portfolio. And if this is your first time to my channel, I reached financial freedom in less than 10 years by investing in buy and hold real estate. I house hacked twice, but the rest of my properties were purchased as investments. I made work optional and a couple of months ago, quit my W-2. I'm pretty close to retirement age, but I retired at 52, which for some people is a little bit early. I was able to do it because I was buying real estate. I wasn't trying to time the market. But one thing I did is watch trends. And right now, according to an article that just came out from Redfin, 15% of real estate transactions have been canceled. That could be a big number. That could be a small number. This doesn't tell us anything if we're not looking at historically in every month for the last 20 years, how many people canceled their transaction, how many people didn't qualify for lending, how many people found something during the inspection that they didn't like. We are seeing an inventory surge. We're seeing interest rates go up. So I can see that there is some reason for people to back out and say there was more options for me to choose from. So here's the strategy that I've used that's actually got me half my portfolio. Howdy, Mike. When I make an offer on a property, I'm making an offer at a price that makes sense to me. The list price is just a number that meant something to the seller and something that the agent probably suggested. What I'm doing now is I'm watching days on market, and if days on market get to be longer than they normally are, I will make an offer at a number that makes sense to me, which if you're doing the same thing, it should be a number that's so low you are embarrassed by that number. It should be significantly less than what they're asking for because of the demand that's going away because of interest rates coming in. I don't see prices going below where they were last year, but I see them coming down from the wish list price that they have. So what we're seeing is a lot of properties get listed and go under contract. If 15% of them are going to fall out of contract, and that's a statistic, and remember, statistics mean nothing when it happens to you. Make your offer on the property that is under contract, whether it's under contract already or you make your offer and then hear that it's under contract. Know what your limit is. Maybe use an escalation clause to get up to the point where you know that's where you stop getting the yield that you're looking for, so you're not going to go any higher. Make the offer that makes sense to you as your best and final. And every time I'm asked for my best and final, it's either the same number I already offered or lower. And then when they say, thank you for your interest, we've accepted another offer, make sure you reply with this strategy. Thank you. If that deal falls through, my offer still stands. Make sure you send that email to the seller before the pandemic, before the crisis of the transaction crash that we're seeing now. Half my portfolio came from being in what we call second position. The property goes under contract, somebody else wants to buy it, hoping to find enough things wrong in the inspection to negotiate the price, hoping for the appraisal to come in low so they can negotiate the price. And when they don't get those things and they back out, my offer is still sitting there for the seller to accept. And in times when a seller has something like a 1031 exchange going, it can really be in your benefit because they've got a timeline that they're trying to stick to. So when you see properties right now that go under contract and you think that person overpaid, that's crazy, make your offer at the number that makes sense to you. Let them know that you're in second position and that offer still stands. Because with people canceling deals and that trend seeming to go up, even though we have to study the trends to realize if that's true or not, you're more likely to get the deal. I want to thank everybody for coming in here today and hanging out. Let's get some questions into the comment section. What we have today is Matt, the Lumberjack Landlord, and Millennial Mike, who both have channels here on YouTube. The three of us are investing in real estate. One of us has retired, and it's not just because I'm twice as old as those guys. It's because financial freedom can happen from investing in real estate. Lumberjack, tell me a little bit about your channel and what people can learn from you.
Sound, Matt.
You are muted.
How about that?
Someone call a 10-year-old to fix him.
See, there you go. So what you can learn from my channel, aside from how to artistically respond to inane questions, aside from that, you can learn a little bit about real estate, house hacking, self-management, I've done 17 acquisitions in the last 13 months. So still buying deals now today. And I'll only buy a deal if it cash flows well, not a little bit. So that's what you can learn from my channel, Lumberjack Landlord.
I agree with buying the deal that cash flows. A lot of people try to time the market, and whether prices go up or down a year from now, you will benefit by owning the property now and having the cash flow between now and then and experiencing the principal pay down and the tax benefits. My problem actually, and this is something I can say that you're here now. I don't know if you saw this on the live stream the other day. My problem is any investor who says you have to invest now or you should wait 6 months to invest doesn't know the person's position, resources, goals.
Correct.
But someone who says hunt for the great deal and buy the great deal, whether it's now or in 6 months, is the person I think people should be listening to.
100%.
Millennial Mike, tell me a little bit about your channel and what people can learn from you.
Yeah, man. Hopefully I'm not muted like Matt. So my channel is the story of how to get started investing one rental at a time. You might be saying to yourself, well, that sounds an awful lot like another channel you might have seen. But I am in the beginning stages of it. So I picked up 3 properties in the last 13 months, not nearly as savvy as Matt. I've been investing in real estate since 2018. I've got properties in 3 different states. I have 10 units. But what I wanted to do was document the actual process of what it was like to get started, to have my first video be me with no rental properties and barely any money in a bank account, just working a job. And then I documented the entire process over the last 4 years via videos, talking to lenders, talking to agents, networking with other people, talking to property managers. All of those conversations are uploaded for anybody to watch if they want and to critique if they want. So you can see the questions you should ask, see what the journey is like, see how long it's actually taking me to get there. But also the ultimate goal is to see that it is possible to actually make it to where you want to be. So that was the idea behind my channel. And of course, my ultimate goal is to become retired like Dion and not like Matt. I want to be retired thanks to the passive income that I get via real estate investing.
I always am entertained when people, even us, are resistant to say that real estate investing is passive. And Matt, you have 121 units growing and you self-manage. So it looks like it's about 20 hours a week that you and your spouse, one of you, is doing that.
Sure.
I had a tenant turnover last month and the month before. So I had 2 updates, do flooring, do paint, do lights, do electric that we did the video for. I still haven't broke 2 hours a month. Like I went to the property twice. One of those I don't kind of count because I did a 10-minute walkthrough as a live stream. I tell the handyman, this is what I want. Like that was it. I think it's passive. And there are people who make it not passive by self-managing massive portfolios. My goal is to have less units, more cash flow, less time commitment. I'm actually shocked at how lazy I'm finding myself to be in this retirement. A lot of people
You reached a whole new level.
I know. A lot of people say, I don't want to retire because I don't know what I'll do with my time. This is from Calvin and Hobbes, so write this down. There is never enough time to do all of the nothing that we want to.
Yeah.
There's actually something I really like about our channels. So one rental at a time, Lumberjack Landlord, Millennial Mike, me, Matsky Finance, the people who've reached financial freedom or are on the path. It's kind of like this channel that I watch. 2 sides of phi. It's a guy who's been financially free for 3 or 4 years, and it's a guy who's coming up on financial freedom in 2 or 3 years. So they talk to each other about what are your concerns, what are your realizations. They invest in stocks, and I think they use the bucket method, kind of like Joe Kuhn does. But none of us do that, and none of us invest the same, even though we've chosen the same asset class. I'm not doing what Lumberjack has done. You do product reviews on things. I don't even know how to find those things because my handyman does it all. And Mike, you're investing at a distance. Everything I do is within an hour's drive. So we say this often. There is no one right way to reach financial freedom, but there is a one right way for you. So I like that people come to our channels and even people watch channels that we disagree with. I like that. Get the different opinions. Don't make a decision based solely on my information. Don't make a decision based solely on theirs. Get what you can, do your research, and then make the decision that makes sense to you.
Totally agree. I concur.
Yeah, different things work for different people. You know, I mean, I don't know how much sports references you're going to allow me to get away with on this live stream, Dion. But Matt and I can chat here for a little bit. Michael Jordan is the greatest of all time basketball player.
Absolutely.
One of my next favorite players, I'm sure Matt agrees, Kobe Bryant.
Agreed.
And a lot of times people talk about how Kobe Bryant was the closest we ever came to Michael Jordan. But he wasn't a clone copy. He didn't steal every single move, but he took the best of what he liked about Jordan, the best of what he liked about the mentality, and then made it his own. And that's what you have to do with real estate investing. You might have to cherry pick things that you like from certain investors and then take their strategies, put a spin on them, twist it into your own perfect idea, and then move forward from there. And you're never going to be Dion. You're never going to be Matt. You're never going to be me. Not that anyone wants to, but you can be you, and you can steal our ideas and do the best to make it to be the best that you can be.
I've talked with people who watch our channels who I think are doing better than I am. I went to a real estate meetup the other day, Mike, that would have been great if you showed up for the monthly one here at Tacoma Phi. But I met two people who, one is a fraction of my age, kind of like you guys, even younger, 56 units investing on an island near a naval base. I met a couple who work for a city. They're building two places. They're getting their third run. Like, I've never built, I've never done a rehab. So I think there are people watching our channels who sometimes are more successful than I am by far, but we can still share information that can help them improve their business. 100%. And you can make all of the sports ball references you want, even on my channel. I would like to thank today's sponsor, which I wouldn't do on Zuber's channel because I'm not sure you can get away with this in California. But I normally thank the sponsor of the shows, Alien Vodka, who doesn't actually sponsor the show. They just make it possible. The actual sponsor for today's show, if you happen to enjoy a daytime drink, because you can't drink all day unless you start early. It sucks when you put your vodka and your Mountain Dew into a glass and then the ice melts. So the sponsor of today's video is Bullet Ice Cubes. These are restaurant grade bullets that you freeze in a container and you put in your drink so that it stays nice and at the temperature you want without watering down your water that looks like vodka and Mountain Dew. The link to that is in the description below. I am an affiliate, so I will make a penny if you buy from it, but it definitely makes the drinks last longer, especially when you do a 3-hour live stream. I don't know that's what's going to be happening today. That happens on Tuesdays and Sundays, and when we talk Millennial Mike into doing his that long. Yes. So
yeah, I probably should do one, but that's cool. I've never seen those before. I like they come in a little revolver.
It's in a like a speed loader. It's in a speed loader.
I like that.
It's awesome. It's awesome.
But like I said, I wouldn't bring that up on Zuber's channel. Let me get through. This is something I do on my channel. If you guys have ever seen my content. Howdy, Johnny, Texas. Howdy, CJ. Howdy, Michelle. Howdy, Chester. Good afternoon. Howdy, Bird Vids. I got my last house in second position as well. Awesome. And congratulations. That's great. Thank you for coming and hanging out. That is totally awesome. Like I said, I want to say it's half my portfolio. I have 7 properties. So it's not like it's a huge, sample group, but half of those I wouldn't have if I didn't have the second position. Mark, howdy. Aloha from Hawaii. You guys need to add Millennial Mike to the group for members. I believe so. Ninja Turtles. We have the REI Avengers. I wanted to go with the Fourth Musketeer because I'm an Alexander Dumas fan. I read all of his books. And but I don't think enough people get the reference. So the REI Avengers is the way we went, and I like it a lot. For Beatles, although I have the hair for the Beatles. Levi, howdy. Basically, how to effectively communicate. You won't take much of their time, but you're a serious buyer. Absolutely. Ring Seeker, howdy. When would you use escalation versus final and best? If you see a significant difference in what you think you have to offer that could get accepted versus what they could go up to, that's when I would use an escalation. So if you see a house listed for $300,000, that's worth $450,000 and you know it, that seller might not. So you make a $300,000 offer that quick. If you think it's going to escalate up, I would add an escalation clause. If you think you're at your limit already and you're not going to go up from what your offer is because it's worth 300, you see it listed at 300, you'll get your yield at 300, you make 300, best and final. Opinions?
I'll let you know how it goes. I've got an offer in. We tried to do it before. Property went on the market on Tuesday. We had an offer there by Tuesday night. They declined it Wednesday afternoon. It was well over ask. I think they completely mispriced it. I think they're probably 100 light on the number, if I had to guess. Based on everything I know. I think they're 100 light. And so I'm gonna look at it Saturday with the open house when they do the walkthrough. And then we'll do another offer because my other one expired. They declined it. We didn't counter, or they didn't counter, so we didn't negotiate with ourselves. And so we'll just do the walkthrough on Saturday and see how it goes. And based on that, like I said, I think it's 100 underpriced. I wouldn't hesitate in using escalators, $6,000 at a pop to get to that 100K. The mistake that people make with escalators is they make them $1,000. That's stupid. And here's why that's stupid. Somebody comes in with a 345 and you come in, you outkick them at a 346 as an example. If there is any other term on that other offer that's significantly better or even a little bit better, they're just going to take the other offer. Just because yours is highest doesn't mean they have to take it. So when you're actually using an escalator, do not use a dumb number like $1,000. Use a significant number, 5, 6. Usually what I like to do is I like to use 6 because 5 is the way most people's brains think. So if it's a 350 house, I wouldn't offer 350. I would offer 352 with a $6,000 escalator. That means I outkick anybody unless they really outkick their coverage on me and they overpay, because I'm going to have already assessed where I'm going to get my 20% return. So that's how to properly use an escalator.
I like that. I actually think I will start incorporating that. I haven't done that. I've been the in the box thinker when it came to escalation clauses and went in increments of 5.
I beat them all the time. I love it.
Nice.
So you guys have got significantly more time investing in real estate than me, including the entire last 10 years of it being an up market and a very competitive market. Me personally, I've never had to get into a situation where I put an escalation clause in. Now I have raised my price for like final and best and things like that, but typically, and especially right now, I know Zuber talks a lot about, hey, we're looking at properties that are been on the market for at least 15 days. I think he might even change that recently to at least 30 days. There's probably a good chance that if they say final and best, they're bluffing you. And I would just resend them the same offer I already sent them. Your house has been on the market for 30 days. I don't think you got anything else. I just think you're hoping to get a little bit more out of me, maybe. And even if, just be aware of the fact that Matt had a recent experience where other lenders sometimes do shady stuff, or other agents will sometimes do shady stuff, and you had to go and get a little vengeance on somebody. So yeah, I mean, as the market changes, be aware of that. We're not seeing the bidding wars everywhere that we were before, at least not in Gary, Indiana, where I invest. It's still pretty competitive out here, and in Washington and near Seattle, it's still a pretty hot market. But yeah, I mean, from an investor standpoint, I'm hesitant to have an escalation clause. I mean, unless you've really done your numbers and you know what the actual highest amount of money you can pay and still get your yield and still have it be a great deal, and you've made your offer and you're going to escalate up to that. But there's just something about the whole auctioneering process of I'll raise them 500 that makes me think someone who's new might accidentally get a little too emotionally invested and be willing to keep going past the number they should. And so I would just be careful playing with fire.
Yeah. So 2 things. The thing that you most often have to make sure that you have in the offer is that proof of the other offer must be shown. You have to show me. Can't just say it. You got to show it. So that's the first thing. The second thing is, in most states, I don't know all, but in most states, if they are coming back asking best and final, they have to share with you that there actually is a competing offer on the table. So they actually have to disclose that it's what's called a multi-offer situation. They have to disclose that. Just because I'm not an agent doesn't mean I know the rules. So I don't know the rules. So that's usually what happens. Okay.
I had an agent try to get me that way. I think it was around 2018. I was buying a duplex. I had my offer in with an escalation clause. Interest rates were high, but it was the right price. And I could go up about another 20,000 and still hit my yield. I got the deal at the offer price. They came back and they said, we have 2 other offers that are the same as yours. We need your best and final. I had an escalation clause in place, which meant if they had another offer, they should have said, it's gone up 1.
Right.
They didn't. So the guy just he was hoping I didn't understand anything about this. And I said, so he said, we have 2 other offers. We need your best and final. I said, I've made my best and final. And since they couldn't produce the other 2 offers, it didn't go up. It stayed where it was. I ended up getting the deal. That's the one I negotiated down even after that, because it was in the middle of a 1031.
There are agents that will try and do that. And I'm looking forward to the next 2 years for them. And then the second piece about that is that they will think that an offer on the phone, oh yeah, we're definitely going to put an offer in. Never comes. It happens all the time.
Mark, you guys are awesome. Learned so much from all of you. Exactly what Dion said. All different, but all the same. Awesome.
Winners.
Michelle, I want to be a clone of all of you. But
That'd be an ugly clone.
it'd be an interesting amalgamation for sure.
Yeah.
But I only want 4 duplexes and move to Columbia. So me and you align very closely. The minimum number of units to the maximum number of cash flow that sets the life that you want, so that you can go and live where you want to. And Columbia is amazing. I liked Cartagena. It was a little touristy. But there was a place that we rented a car and drove like 5 hours out a dirt road to these hot springs. That's where I would probably move to. First person to speak English there in like 5 years or something. Chester. Howdy. Agreed. A variety of opinions is powerful, especially when you hear the same themes and principles about a subject from different people. And there are some things that we are kind of an echo chamber. We will say it's always a good day to buy a great deal. Matt and Mike will say it's a great time usually to recycle capital if you can put the funds to more work. I say minimum number of units with the most number of cash flow. So we have differences of opinions that can lead to what your goal is, whichever one of those it would be. Device that chills a drink and doesn't water it down. I love it.
I love it.
Show force. Howdy. What's that, man?
I'm gonna have to get some of those.
I know. I will send you a link because I want my penny. They do clank around in the glass though, so I use this smaller topped glasses so you never get a bullet to the teeth. Levi, howdy. Sorry, I think my question didn't make it in the chat. I don't think I saw it, so no. I was wondering what your initial communications look like to a realtor when intending to work with multiple, then added the basically message. Okay. So we'll go through one at a time. We'll start with Millennial Mike. You meet a new agent and you want to work with them, but you're going to be working with more than one agent. How do you present it?
I mean, I've just always geared up my conversation with all of my existing agents when I talk with them. And honestly, I'm going to steal all of Matt's phrases now, but these weren't the phrases I used to use, but you dance with the one who brung you. I chat with everybody. I'll buy deals from anyone. I let the agent that I'm chatting with know, hey, I am currently in the market for 3-bedroom, 1-bath, 1,000-square-foot deals in Gary, Indiana. They're going to rent for $900 to $1,100 a month, price between $60,000 to $90,000. That's what I'm looking for. That's my buy box. If you can find me something like this and you bring it to me, I'd be more than happy to buy the property with you and use you for the purchase. But I'm also telling wholesalers, I also have other agents I've previously purchased with. So I'm not married to anybody. I'm just trying to play the field a little bit, you know? Matt knows what that's like, or at least he used to.
So long ago. Only with agents, Mike. Only with agents and brokers. That's it.
Yeah.
Okay, cool. So you give him your buy box and you explain it. Matt, anything you do differently?
No, I mean, I think that's, I maybe a little bit differently. It's somewhat rude, so I don't maybe recommend doing this, but I do it and I think it's funny. I do remind them that it's been X amount of months since they brought me a deal. I mean, because
well, this is one that you met. You meet a new one. How do you start the conversation?
Yeah. So if I met a brand new one, I would say, we've closed deals in the last 2 years with 13 different agents. We've done wholesale, we've done seller finance, we've done although not meaningful, but I basically walked them through, here's all the different types of deals that I've done. So what we like to talk about is the best part about doing business with me is that I'll perform, I'll close. So if you bring me the deal, absolutely, we can absolutely put something together and you'll know within 24 hours if I'm going to move on that deal, put an offer together and then, we're smooth sailing. So I always try to sell them on how easy I am to deal with from a transaction perspective. And I can say, if I'm having that conversation with them, I'm pre-qualified to this. I have this much money in cash ready. So if we needed to do a cash deal, I basically run them through for just a few minutes, all the reasons why I'm the person that they should consider for that next deal that they're going to get, because every agent gets the deal before they put it to market, right? They find out that they won the listing and they're like, yay, I won the listing. And then they're like, okay, let's do this as a marketing plan. I like to get agents that win the listings and are good at winning listings, but then they can say, would you be open to my showing this to an investor? And sometimes people are like, well, what do we have to lose? It's like nothing. And then I'm able to go through the process. I know that the other option is that they might throw it on the market. So agents like that because I've fully prepared them, and every agent likes having pocket buyers.
So two things.
So
First,
do wholesalers.
Oh,
so
for sure.
Right.
Yeah.
Two things. First thing, thanks for the super chat, Mike. I know that helps the algorithm, and we'll push this out to more people. And I'll buy lunch next time. Second thing, so Millennial Mike shares the buy box and explains what you're looking for to get on their buyer's list. And Matt, you explain how strong of a buyer you are, how much you'll close. I do. This is my strategy, and it's basically I have a Dion Talk with the agent, and people are either motivated by the carrot or the stick. So I remove the stick and I tell them what the carrot is. The problem with an agent working with somebody who has multiple agents is that person might spend a bunch of your time. You invest, you answer questions, you work for them, you send them things, you go do showings with them, and then someone else gets a commission. That's the reason why agents say, I want to sign an exclusivity agreement with you. So if you're a home buyer and you're going to have an agent take you to 15 houses, sign that agreement, protect their time. I get it. I explain to the agents when I meet them in that first conversation, I'm an investor. You're never going to show me a property. I might ask one or two questions of, can you verify there's no HOA or verify this is not a foreclosure or a short sale? But I'm generally not going to take up any of your time. What I'm going to do is give you my criteria, just like Millennial Mike does. Here's my buy box, exactly what I'm looking for. And then I'm going to talk about from Matt's perspective of when I find a deal that I want, I'm clear cut. I make my offer, and I have only backed out of one deal in the last 10 years. And that was because I found enough reasons and it appraised low. I generally only make an offer and take up your time when I want, and I actually intend to close on a property. So now they have the potential upside of closing deals. They know my buy box. They know I'm not going to take up a bunch of their time. And so far, I haven't found an agent in real world where they've said, I won't work with you. I have had a lot of keyboard warriors say, I would never work with somebody if they did that to me. And I'm like, hey, great. I'm not reaching out to you in the real world. I'm looking out to agents that want to make the $5,000 to $20,000 when I close on a property. Thank you, Matt. I have to buy you lunch in Vegas now. I picked the place though. McDonald's, Happy Meal, value meal.
By that point, it's going to be like $17. You're not getting off light. Inflation, it's going to be like $17.
And McDonald's went away as somebody who, as a small child, loved when we actually got the chance to go to McDonald's, because I grew up so poor. McDonald's was the fancy restaurant for us. Oh, yeah. It used to be a little more affordable. Now Wendy's is the only thing you can get for like a meal under $10. I do the 4 for $4.
I went to Taco Bell today and I was rudely surprised that all of their box lunches are gone. They're like sold out. And I was like, listen, I am a connoisseur of this menu. I know for a fact that burrito I can order. The only thing that you're selling out of is being able to buy it for $6.
Right,
that's the only thing you're sold out of. She's like, she's literally looking at me like, I don't know what you want me to say. I want the box is what I want.
One of the best things about getting to financial freedom is being able to go to Taco Bell or McDonald's and not worry about the price.
True story. Try having 3 kids in the back seat. So real quick note. I remember as a kid, my Happy Meal, my sister's Happy Meal, and my mom, all of us getting food. And I remember that entire expedition being like $7, $8, $9, like right around in there. I did that with myself, my wife, and the third kid we don't eat. She just gets leftovers. So, or whatever left over from the other two that didn't eat. So that was $33.94. Holy cow. And that's McDonald's. Like I remember when you used to get into a sit down restaurant and you'd spend $34.
Mhm.
That's $34 for
Yeah.
these.
So, Matt, we are old. Things were cheap when we were kids. But I had the weirdest childhood. We would raise animals because we used to move into houses, fix the doors and windows, and wait for the owners to show up. But we always had animals. So whenever friends came to our house, I couldn't understand that they were surprised we were having steak. Like, there's 300 pounds of it in the freezer because we raised that cow ourselves. Why is
Yes.
this a special treat? But you got to go to McDonald's? Like a restaurant that comes with a toy? Are you kidding? You guys must be billionaires.
Yes.
Howdy, DB. Hi, Dion. DB here. Closed on property number 5 today. Congrats. Awesome. I have been watching you and learning from the three amigos since you first appeared on BiggerPockets. Thanks for your help. Thank you. That is awesome. You're going to have to share that story with us. Bill, howdy. Mark, what is your guys' thoughts on the Inflation Act and hiring of agents to possibly increase audits? So I took a picture because I made a Facebook post this morning on that because I watch, and I want to give credit where it's due. Minority Mindset. Great video came out today breaking down however many 300 and something billion dollars being spent on green stuff is not going to reduce inflation, but it's part of the Inflation Reduction Act. Increasing IRS agents, yeah, I mean, if it's going to generate 700 billion and something because they are able to do more audits and find more money, yes, but that money's got to be found from us. It's not going to be found from the billionaires. There's only 750 of them in the United States. It doesn't take $80 billion invested over the next 10 years. They're not hiring 87,000 people tomorrow to double the size of the IRS. 50,000 people are scheduled to retire over the next 10 years. So they're adding 87,000 over 10 years. So it will increase slowly over time. So that's my opinion on that. I try to stay as unpolitical as I can. And I took a picture because as soon as I made that Facebook post, a government van parked outside my house. Never seen one there before, but he's sitting out there like 4 hours now. Like, no politics. I don't want to defund the channel.
So let me give you a little law enforcement perspective on this one. Law enforcement, which technically the IRS is technically law enforcement. They do have arresting powers, as scary as that is. So don't mess up your taxes, homies. The law enforcement lags significantly behind technology. It's very, very difficult to stay on the cutting edge of technology, right? So the way that it used to be back in the day, oh yeah, we're going to bust this guy for financial crimes. We're going to write a search warrant for his bank records. Well, wonderful. But everybody nowadays uses cryptocurrency or Venmo, Cash App, PayPal, Zelle, and so many different forms of online transactions that it gets more and more difficult to actually figure out where and how the money is moving. It gets easier and easier to launder money. So my opinion, and I think what we're going to find out is, as Dion mentioned, the 87,000 new agents, new IRS agents, are not to go after the billionaires who have armies of lawyers and unlimited funds to defend their money from the IRS. They're going to go after you, me, and every other middle income, lower middle income individual who's making under 100 grand, who doesn't have the money for a lawyer, who isn't paying a CPA, who's sending money to their buddies for the 15th month in a row for groceries, sending $800 grocery bills routinely. That's who's going to start getting audited. They want to go get theirs from you. And why target 750 people and have a fight worth gladiators watching when you could go after 150 million people and kick their butts left and right and bring a little bit more in from them? That's who they're going for. And that's why they hired all these people, because they need new people to learn the technology and go kick the little man's butt.
And I guarantee the one thing that is consistent across all of our channels. So we have different strategies. We have different asset classes. We have different goals. We have different hairstyles. All of us are saying, don't cheat on your taxes. There's enough benefits to investing in real estate that you don't need to cheat.
Right.
And then Millennial Mike's super chat. about the lumberjack being an amazing individual for those people listening in Futureland in a podcast.
Yeah, he's kind of a dork, dude. Get a 1 in the chats for that, bro.
Gotta read the right chat. That's true. CJ, first in chat. Trope Force, no way. He's a lumberjack and he's okay. My entire family is lumberjacks. They actually run residential tree services and do logging. None of them look like Matt.
It's true.
I think I'm the fattest person in my family. I'm definitely the fattest. I'm the laziest, so I've got to be the fattest. Trope. Maybe when Matt retires, he will become a dork. Goals. Life goals.
Kind of a dork now. I mean, I'm not a full-time dork. I'm busy working, but I'm a part-time dork.
Yep.
I can even prove it.
And your super chat is 1,000 times what I will make on the ice cubes. Bullet ice cubes. Link will be in the comments below after the video. Nice.
Oh, yeah.
This you got yard sailing the other day, right?
I did. And it's not the original 1977 version, but it is the 1982 re-release.
That's legit.
Just saying. So I fully approved dork over here.
So here I'll challenge you to be a dork.
Okay.
I found a
Star Wars.
poster, no, Firefly,
Okay.
signed by the entire cast. And I got it, right?
Yeah.
And gave it to my daughter. So when you give that to your daughter, when you've nerdified one of your kids to the point where they will be excited about that, then you reach actual nerd status.
So Samuel was like, "Is that going to go in my room?" And I was like, no.
There you go. Good job.
I was like, "No, that's going in Dad's office and studio."
Levi, great answers. Thank you, guys. I will implement those ideas. Awesome. Tom. Howdy, Jason. That's so true. Taco Bell is just same ingredients in different shapes.
Yes.
Very true.
So true.
And then Mark took back a message to make me lose sleep tonight and wonder forever what that message was. Chester. Jeff Spreek from Minority Mindset does a great job at breaking down complex financial concepts in the average, everyday layman's language. He's also pretty good about staying politically neutral. Millennial Mike is right about the IRS Tax Enforcement Division. Don't get it confused, though. Not all IRS agents have peacetime enforcement powers. No, they have a phone to the one who does.
Right.
Sure.
Mark, when did you guys feel comfortable starting a YouTube channel? In Futureland. It hasn't happened yet. I'm not comfortable doing this. I'm sharing details about a stupid childhood, several divorces, a lot of bad debt, a lot of bad decisions. Yeah, none of this is comfortable.
But you were
This will
so
help somebody.
good at it.
We're not there yet. I think if we were good at YouTube, because I've realized that I thought about making this video about this instead of the Redfin, dropping 15% in, deals canceling. I've figured out why people don't like us. Why when we talk about a mindset channel or a who's your nemesis? The Nick guy. The
Reventure Consulting.
Right. They have a lot of views because crash videos get views. I was looking at the mindset channel and he's got like 65 views, 40 views, 400 views, 65,000 views because it says crash in the title. Like there's a shift. So he's smart and he went crash videos get views. So he makes a bunch of crash videos. So people that watch that type of channel are looking for the crash stuff, which is negative. There's going to be unemployment. There's going to be a recession. There's going to be inflation. There's going to be negative. So people want that negative reinforcement. It's an addiction like depression. You want to be more depressed. We're positive. It's not that we're saying you have to buy now. We're not saying wait for any reason. We're not saying buy now for any reason. We're saying find the right deal. But we're saying something like, okay, so you're going to buy a rental property. Well, here's the data that's been tracked since 1940 on this one sheet that shows that in an 85-year period, rents have never gone down market-wide. Maybe buying a rental property is a good idea. That positivity irritates the people that are going to channels looking for that negative reinforcement. I just didn't know how to get that into a thumbnail. So that's why this video is not about that.
Does it irritate them more if I go and pick up my food in my Lamborghini at their place of work? Like, this is the thing, right? We're trying to give people freedom. We're trying to, at the end of the day, that's why my license plate on my car will say your rent.
The negative reinforcement doesn't come from positive channels. Look at Meet Kevin and Graham Stephan. Both of them have over a dozen crash videos.
Yeah.
Explaining that there's no crash.
Yes.
They go, look, 2022 crash. Here's why it's not going to happen. Because this was in 2008. It's not here. This was in 2008. It's not here. Like, they're smart. They know how to get the clicks through to get the views, but they're positive.
Yes.
Any one of us would like to have their income and lifestyle. Anyone watching would like to have the income. You can then choose to do whatever you want.
Mhm.
I wouldn't want the income or lifestyle of somebody who has to work, hasn't invested, hasn't got a rental. So if you won't take criticism from somebody, don't take advice from them.
Yeah.
Yeah, so human beings have a proclivity towards negativity. It's called negativity bias, right? It's a feature of our evolution, not a bug, right? If you recognize pattern recognition, hey, when that caveman went out there and pet that lion, he got eaten. And then another caveman went out there and pet that lion. Well, he got eaten too. I'm not going to go pet the lion. We all pay attention to the negative things that happen in society, in our own personal life experiences. And that's why we have a proclivity. It's what's called negativity bias. So when you see two thumbnails side by side, and one of them has a burning city in the background and the Grim Reaper on the thumbnail, and the other one is just a title that says crash not happening. And then when you look at two titles and one of them says the housing market is not going to drop, and the other one says crash incoming, take cover, you're going to click on the over sensationalized, bombastically written title because of your negativity bias. And then when you watch that video and everybody else watches that video, and the individual who's making those videos, as you hinted at earlier, catches on that, wow, I'm getting a couple hundred views per video for these types of videos, but man, if I just do this type of thumbnail and 75% of them have a burning city, burning car, burning house in the background, and 50% of the titles have crash in all caps in the first 5 words of the title, that's a really good way to grow a YouTube channel. Probably not the best real estate advice, but really good advice on how to grow a YouTube channel.
Yep, totally agree. I don't even think it's an internal struggle. I would rather get 1,000 views on a video and help a few hundred people actually make decisions that improve their future.
Sure.
Than get 10,000 views on a video and scare a bunch of people.
Yep.
Because the one thing that we are not doing is growing YouTube for financial freedom. Financial freedom comes from real estate.
Yes.
YouTube is therapy sessions. We're talking to other people who like to invest in real estate, but it's also a chance to help people and scaring people, unless we saw something scary coming. If I saw, hey, we're at 55% adjustable rate mortgages, yeah, there'd be a lot of warnings on my channel.
Sure.
Chester, nerdified, love it. Sebastian, howdy. Ring seeker, you're saying do the work, and that is boring for most people and very difficult. Do the work is very boring. This is not sexy. Although Matt showing up to buy his McDonald's food in his Lamborghini is a little sexier. Me knowing that for 2 months now, and I'm just now getting to the point where this is a reality. I'm not just on vacation. Never have to work. Can't even say it. Never have to work again in my life. Could choose to, but never have to.
Exactly.
Because of what we're telling people to do. Find the great deal and buy it. Find the next great deal and buy it. Don't time the market. Don't wait. Don't be in a rush, but hunt for those great deals. Do the work. Learn the work, because there's 4 words. I think if I remember, it's 4 words. Confidence comes from competence.
Mm-hmm.
Each skill that you learn, how do you analyze a deal? How do you figure out area average rents? How do you find and vet your lenders? How do you find a tenant? How do you get your leases? Every one of those skills that you learn and get under your belt, is that something I can actually do? The confidence comes to make this very hard work, like you said, very difficult, ring seeker, becomes very easy.
Mm-hmm.
Beth, howdy, thanks for hanging out. I should invite Beth to this next time we do this.
Yeah.
We'll send a link, get Beth in here, and get, like, no offense to you guys, but an actual smart person. Crash videos foster a scary mindset. Hey, that's the alarm that says get ready for the one we were going to do at noon today.
Oh, yeah.
Almost every successful investor I know has an abundance mindset. Very true. Yep. CJ Underwood, all love the you are your rent license plate. Yeah, mine says my other right is the TARDIS. So that sets the level of nerd. It actually really does. It's the plate cover that's here. Trope Force. I've said your name right before. It messed me up. I'm looking at house hacking. Great idea. All three of us have done that. Two of us are still doing that.
Mhm.
2 duplexes on adjacent lots have been sitting on the MLS for over 30 days since the 2 properties are essentially mirrored and share driveways. It seems one and a half. It seems reasonable, if not essential, to acquire both listings. Maybe 4 units for 4 house hacking, though. I don't know if you would call it a fourplex if it's 2 separate parcels. Lenders might kind of hesitate to do that.
You also wouldn't want to try and combine them either, because it's, even if they're owned by the same people, you have 2 stub outs for water sewer, and you lose value having a second building on the same parcel versus having it on its own parcel. So, yeah.
Yeah, and just make sure that the easement is registered with the county so that if you do buy one, the driveway that exists for both will exist in the future for both. I wouldn't hesitate to buy one that had a shared driveway.
Yep, me either.
I don't know if any of mine do, but I wouldn't have hesitated. As long as the easement is registered with the county.
Mm-hmm.
Keyser, howdy. Mike does the same. He started with transaction crash like months ago, trying to get clicks too. Let's all be honest. Yeah, let's all be honest. I do that too, because we are seeing a transaction crash. We are not seeing a housing crash. Look at prices. Like, if I could share this data without giving out the address of tenants of mine, I would totally look at a duplex that I bought for $290,000 3 years ago. The Redfin, Zillow, and the comps in the area are all over 700,000 now. Like, it's over 100% from 3 years ago. We are not seeing a crash in prices. So I will defend Mike with that. It's factual. No one is predicting. That's way over there. Nobody's taking the crystal ball and saying, I see a crash coming in transactions. We're able to pull up data and go. Less deals are being done. This is a fact.
Mm-hmm.
This does not mean prices are going below where they were last year, which would be how you would have a crash. If prices come down, which Mike Zuber is also saying, coming down from wish list pricing, yes, the videos will get more views. Yes, we'll put crashing transactions in our titles. And those videos do get more views, which helps more people. But to say housing crash in prices and then have a video talking about here's all the reasons why there's going to be a housing crash in prices for over 2 years, and there not being one. Well,
Just,
I don't have an
it
actual
just
link
means
to drop.
it just means you have it just means you have no credibility. That's all.
But I get that, Keyser. Clickbait is something we all have to be careful of. I like to, and no one else does. I think I'm hilarious. I'll make dad jokes all the time in my videos.
It's true.
So I'll put a kind of a joke in the thumbnail. But you have to be really careful that what you're joking about is in the video,
Right.
Not here's a housing crash coming and then a bunch of scary data that doesn't mean anything, like month-on-month transaction or cost coming down, like they do every year.
Right.
Every January, every time, when people stop buying, prices come down, and saying that's a reason for a housing crash. Jay, but I'll get to you, Jay. Keyser, I welcome varying opinions. I'm not always right. Ask every girl I've ever dated.
You don't even have to go that far. He's not always right.
Right, just ask these guys. I'm not right all the time. I'm right half the time, but I'm right enough times to buy real estate to make work optional, and that's what we're trying to share.
That's right.
If I had the crystal ball and it actually worked and I saw prices were going to come down 50% next year, I'd still be buying a rental today because I'm looking for cash flow and don't care what happens to prices.
You don't always have to be right. You just have to have a contingency plan in place when something bad happens. So that's how we plan an operation. This is how we hope it's going to happen. Everybody comes out, surrenders, puts their hands up, and nothing bad happens. But here's what you do when they don't come out. And here's what you do when you take a casualty. And here's what you do when you get hit. You just have contingency plans. You train it out. And that applies to everything in life: sports, being an officer, or real estate investing. Well, great. The value of my house dropped. Okay, well, if I have to have an emergency move because a family member on the other side of the country needs me and I've got to sell at a loss, I'm not going to sell. I'm going to turn it into a rental, float the property for a couple of years, and then sell it later. You have a contingency plan in place.
The follow-up question to that, for anybody who's saying there is a crash, you should wait to buy. What's the benefit? If the crash happens because rates go up, you're going to pay more. And you guys pointed this out the other day. People, you have to have one or the other. Is there going to be a crash, or are iBuyers and institutional buyers buying up all the property and creating a bunch of demand so that no one else can ever buy a property? You have to have one fear side of the fence there.
The other thing too that is never in anyone's equation is where they're going to live and how much rent they have to pay. Like, if you buy a house, 30-year fixed rate debt, whether it's owner occ or you're going to do a multifamily, house hack, either one of them is a fixed price. This is what your mortgage payment is every single month. And if you're renting, in case you haven't seen the news recently, rents are up 30%. So my question for you is, what's the next year worth of making rental payments look like? What's the next year look like? What's the year after that look like? Well, you're waiting for the market to correct and you're spending $2,000 a month or $2,500 a month. I've got bad news. You just spent, if you're going $2,500 a month, you just spent $90,000 in 3 years waiting for the market to correct, and you made zero impact with that rent. The tax benefits of real estate alone. It's just, honest to God, it's just math.
One of the problems we run into is you have Kris Krohn, Grant Cardone, some guys with thousands, 8,000, 9,000 units, several syndications, tons of money, talking about rent where you live and own investments, right? It makes sense at their level.
Sure.
Like they want to rent, move, not be tied down, whatever it is, their house they can rent. If you're investing and you're trying to grow a portfolio, renting, thinking that there's a justifiable reason to rent instead of investing is a challenge to me. If you can house hack, if you can have roommates while you're renting and invest, sure. But if you're saying, like, what was his name? I watch his stuff all the time. Richard Fain said,
Okay.
he made a follow-up video fixing this mistake. He said, I'm going to sell my house, I'm going to rent for a year, and I'm going to buy when prices crash. It's a year later now. Prices haven't crashed. He didn't sell his house. He said, I can't sell my house because my interest rate is like down here. The interest rate I'm buying would be here. Rent would be this much. Like, he logically thought it through and thought it would be a mistake. So when we hear somebody who's got the income to do whatever they want with their house, sure. But if you're still growing that portfolio, not only just the power of house hacking, but the home ownership aspect too. There's a channel, the most watched video on it is why I rent and why you should too. Okay. Let's take the statistic of people when they hit retirement age. The average net worth of a person who's owned their house, not been an investor, not bought rentals, but just been a homeowner, is $221,000. Average net worth at retirement. The average net worth of a person who's been renting at retirement age, $6,000. That's a big difference.
Well,
That's heartbreaking is what that is. That's so sad.
Jay, Beth Traverso, you could not be more on point. Cheers. Awesome. Sebastian. Millennial Mike, I've been looking at Gary, Indiana properties. Yields look compelling, but risk looks quite high. Are you continuing to invest there?
Yeah. So Sebastian, thank you for the question. That's a good question. And it would take a very long time to answer all of it into to the depth that I would like to. So I just recommend you probably check out some of the videos on my channel. But yes, I'm going to continue to invest in Gary, Indiana. The primary reason why a lot of people say to themselves, you know what, I'm tired of paying these $800,000, looking at $800,000 houses in California, Seattle, New York, pick your coastal city that's ridiculously overpriced. I want to go invest somewhere that makes more sense for me, that's more affordable. And then you find the Midwest, where the pot of gold is at the end of the rainbow, and it's beautiful. Wow, look at this house that's $80,000. Holy smokes! And that's what I do. I look for $60,000 to $90,000 houses that rent for $900 to $1,100 a month. I'm getting a good cash on cash return. But you have to be aware of the fact that there are a lot of different, very unique circumstances in any rental market, but especially someplace like Gary, Indiana, which suffered from deindustrialization. You know, the city at one point had 200,000 people. Now it's only down to 68,000. Well, if you watch any regular YouTube videos, you know, they're going to probably tell you, well, you got to be careful of depopulation. You don't want to buy into a struggling city. Gary, Indiana is 3 times the national poverty rate, 3 times the national crime rate. You shouldn't own there. You're going to be a slumlord. You're going to fail. Dude, I can do a Google search for Gary, Indiana too and read all the same articles. I get it. Means that you're doing research. The reason I got started there was my mentor, Mark. I watched him grow from like 2 or 3 rentals to 25 rentals. And finally, I couldn't come up with any more excuses why I shouldn't try it either. And so the most important thing you can do if you want to invest in any network, and that's including local ones, is to network first. You want a team of people who have your back, who are already investing in that area, who know the contractors and know the property managers and know good agents and know good wholesalers, and you can just copy and paste their success and their network into your life. But that only comes from talking to other people consistently over time. You can do that at a distance like I did in Gary, Indiana. It took a lot more phone calls, a lot more emails, and a lot less meeting in person. But eventually you build a team to be successful. So whether you want to invest in Gary, some other network, or your local network, you should network, or your local market, you should network more, because that's what's going to lead you to success. But yes, I'm still investing in Gary. I'm working on 2 projects right now, 2 BRRRR projects right there. Once I'm done with that and I cash out, get the money back, I'll be on to some more.
Nice.
Sorry for the monologue.
No, that's great. This is a live stream. Answer the questions as detailed as we can.
I have much less to talk about Gary, Indiana.
Jason C. Howdy. Maybe the same reasons people watch scary movies. I agree. We're going to watch crashes. You see a train crash, can't look away. We're going to watch crash videos. Yeah. Cashflow Johnny Ramirez. Howdy. What's up, real estate freaks? Afro Capitalist. Awesome name. And then my chat moved. I like it when my chat moves. It means people are talking. There we go. How do you find average deal in a given market when looking at a buy box? Could you give an example? So I'll give a really quick version and then we'll turn it over to Millennial Mike, who's actually found new markets. Matt and I have been investing in the same area for a long time, so we just intrinsically know. But here's how I find and watch what my current area average is, because yield can go up and down over time in the same market. I look at about 100 deals. So I'm going to do this in percentages. About 80%. So 80 of those 100 deals, I would lose money and never want to buy. People just have them listed too high. They're hoping for a certain amount, or they're super proud of their property. 20% might make some money, but aren't great deals. Those 20 kind of tell me what the average is. They're not great deals, but they would make some money. What would that yield be? If it's 3%, my great deal would be 5%. In my area, the 20 that would generally make money are 6 to 8%, somewhere hovering in there. The good deals that I might pursue if I couldn't find anything else for a long time, but I'm waiting for the right good deals, the great deals, not just the good deals. So with 6 to 8, I'm hunting for 10. The element that you need is time. Track the properties, because when you see a bunch of prices, that doesn't tell you anything. Which ones close, which ones stay on the market for a month or 2, which ones are pulled off the market. So that's how I find my average. Takes time, and I look for the deals that would make money and then average those out. How'd you find your market? I mean, you used a mentor, Mark Matsky, who helped you find Gary, Indiana, but you're looking at some other markets now too. I think you've invested in what, Ohio or somewhere?
Chicago, which is, it sounds like it's another market. It's only 30 minutes away from where I currently own. And I had another mentor there who owns 56 houses in that area. And also he invests in Chicago and also in Hammond, Indiana, which is right next door to Gary. So I wouldn't say it's a new market. I'd say just kind of expanding. Technically it's a new market, but just expanding my circle just a little bit further. But I mean, if you want to know how to figure out what average is, I mean, that's literally the entire point of the first like 50 videos in Mike's course. Michael Zuber, One Rental at a Time's course. He's going to teach you a skill. And with that skill, you would be able to figure it out in any market. And what it comes down to is you just have to get hyper-focused. You cannot effectively compare a studio apartment that could be used for student housing to a 5-bed, 2.5-bath house. It's very hard to effectively compare these things in terms of your return. Now, you can, but it's much more effective to look at all of the studio apartments, or all of, this is what I do, all of the 3-bed, 1-baths in Gary, Indiana that I can find. Every 3-bed, 1-bath that's on the market at one time, you run the numbers on it. And running the numbers just means what I'm going to pay to acquire it, what's my cash out of pocket, how much is it going to rent for, set aside money for vacancies, maintenance, and other expenses, what's my leftover cash on cash return going to be, and what's my cash flow going to look like monthly. Once you get down to those last 2 final things, your yield and your monthly cash flow, you can look at the yield and monthly cash flow on this 3-bed, 1-bath property compared to every other 3-bed, 1-bath property. And if you just rank order file these, Well, this 3-bed, 1-bath property is giving me a 22% cash on cash return with a $320 a monthly cash flow. And this one's giving me a 4% cash on cash return with a $60 monthly cash flow. It's very easy to rank file those and be like, okay, I'm going to take the one at the top. That's the one that I'm going to go with. And that's how you figure out what average is. Well, you figure out top, you can figure out bottom, and you can figure out most deals probably fall somewhere in the middle. Most of them are like 100 to 150 bucks in Gary, 10% cash on cash return. I don't want to play there. I want to look for the unicorn out there and get the really good deal. So I just keep running the numbers until I find one that jumps out at me. But if you spread what you're looking out out too much to comparing studios to 5 beds to small multifamily to single family, the yield metric is an effective way to calculate against all of those. But really you should get more focused in and try to just become an expert in one specific niche, because all of those different things, it's too complex and you're going to get overwhelmed. You're looking at an entire market at that point, and that is difficult to do. So as Mike says, get hyper focused with your buy box. In his own words on the video we did on a buy box was he's giving you permission to ignore the rest of your market while you get hyper focused on one specific thing and learn that little niche group of properties.
Awesome. Thank you, Legacy OPP, for the cash flow. If I could edit a live stream, I would have Kevin O'Leary come in here and say cash flow a couple times the way he likes to say it on his show. Much appreciated. I didn't see a question. If it did, he would jump to the front of the line, though. Keith, howdy. 3 offers on my flip, backed out or couldn't qualify anymore, and the 4th offer closed full price and paid the seller's closing costs above asking. Awesome. So 4th position, not only 2nd, but that was what we talked about a little bit at the beginning of the video, is with a bunch of, I say a bunch because I haven't studied historically what actually happens in every month, but Redfin did an article that 15% of transactions canceled. So I don't know if that's higher or lower than normal, but if 15% are canceling, about half of my portfolio I purchased in 2nd position. I made an offer, somebody else had the property under contract. And I said, okay, well, if their deal falls through, my offer still stands. And then it came to me. So this is an example of 4th position or 5th.
Compared to last year, it was mid-12s.
Mid-12s. Okay, thank you.
Yeah,
So it's gone up a bit, but it's not like 50%.
Yeah, it's up minimally, especially based on what's going on in the market. It's
Hey, Dion, real quick. Sorry. Hey, but I was looking through the chat and I just happened to see that you have 10.9 thousand subscribers. How close are you to 11,000 subscribers?
I was like 6. It's weird. I'll gain like 50 in a day sometimes. I've been 6 away from 11,000 subscribers for 2 days. It's like the algorithm or something. YouTube said, no, we're not giving that to him. We're just going to hold it up right here.
Guys, like the video. Like the video and sub to the channel, fellas.
I literally just wait until it goes to 10,999 and then I unsubscribe.
I do see every now and then an unsubscribe will go down. I figure, there's people who watch a video, and there was a guy who mentioned a couple of weeks ago, I made a dad joke, and he put in the comments, he's like, I don't come here for jokes, come here for real estate. And I was like, fine, block. But like, I'm going to make dad jokes. You want a channel with no dad jokes? Go become successful at real estate, retire from your job, make a YouTube channel, and don't make any jokes. See if you can keep a straight face and not say something funny or stupid and then pretend it was funny for an hour at a time.
True story. Or 3.
Right. And then, this is up to you guys on how long you guys can hang out today. You guys have jobs.
Not today.
Not
today.
I worked the last 7 days in a row. I have the day off.
Nice. Enjoy it while here with us. So that's what you're determining. How much can you handle while you're with us?
Exactly.
Cash flow, Johnny Ramirez, 53 people watching and 28 likes. Smash the like button for great guys and info. Thank you. Every time you hit the like button, an angel retires before Matt.
True story.
Million, howdy. 3 amigos earned the like. Thank you. Derek, howdy. Dion, that's not a crystal ball. You guys are awesome. That is a crystal ball. How's this not a crystal ball? That's crystal.
That's crystal ball.
It breaks the floor when you drop it. This is not a crystal ball.
That is not a crystal ball.
No.
It will have you see things, though.
It does, yes. It makes me a lot easier to put up with. million. Work optional is super powerful. It really is. Not that you're not going to work, just that you don't have to. Cash flow, John Ramirez. How often are you applying for loans? I want to fish for motivation, but don't want to apply every month or two.
You do not want to apply every month or two.
No, you want to apply every month about 50 times, but then not apply the next month, right? When you apply for a loan and they do a hard credit inquiry on your credit score, you can take a hit, about 6%, 6 points usually. But that gives you a window of up to 30 days to have other, and they call them so you can't go to a car and then a mortgage and then a stereo or whatever. But if you're talking to mortgage lenders, you only get the one hit on your credit score. So when you do that, that's when you shop rates. They actually do it to encourage shopping rates. So you want to answer that question, Matt?
Yeah, I mean, what I've done, so on the commercial side, it's different. They only pull your credit once a year, and then that's what you're stuck with for the year. So on the commercial side, it's different. On the residential side, the way you do it is just like you said, you stack it into a month, but get the pre-approval letter, get all the everything, and save the documents. Say, hey, could you give me that pre-approval? Could you give me a pre-approval letter? Hey, could you give me a letter of this and a letter of that? Because even when you're shopping, if you don't see a deal the next month or the following month, doesn't matter. You can still use those letters and say, this was my most recent letter. That's it. You can say that's my most recent letter.
I'm trying to think. I don't think I've ever had a lender say, we need to run your credit again within 6 months. Like they've just sent me a new letter. They do ask, has anything significant changed?
Yeah.
Did you change jobs? Which now I'll be like, yeah, I did. Actually, I called my lender and I said, hey, I don't have a W-2 anymore. And he said, that will matter if you go to buy a primary house.
Yes.
Because it'll be based on what my cash flow is. He said, but if you're buying another small multifamily, since 75% of rents will count, it's however much down payment you have saved. So even without a W-2, don't quit your job and invest in real estate. I have rental income on my tax returns for over 2 years. That's consistent. So that's when it doesn't impact you so much to quit.
Right. True.
Thank you, Johnny, for that. Melvin, howdy. Listening to while laying out a building. Shh, that's okay. We'll be quiet. Nobody will hear us. And then CJ took back another message to make me lose sleep tonight and wonder forever. Jason, howdy. One of my parents' tenants have been renting from them for 30 plus years. I had a tenant that was in a place for 26 years and then I purchased it. And then he lived there for 5 years. And it's funny because it was his sense of humor. I purchased the place and he said, are you going to kick us out or are you going to raise the rent? And I said, no, I bought it. This is what I want to do. They were on fixed income. They were Section 8. So I used the binder strategy on Section 8 and actually got their portion lowered. But I told the guy, I says, like, I don't want you to move. I'm not moving in here. He goes, good, because I plan on staying here until I die, which he did. So literally lived there until the end of his days. That's Mark saying in the firehouse, adapt, improvise. Adapt, improvise, and overcome. I don't want my brain shut off. How come I see too many officers, ex-officers as real estate influencers? It's a heavily legislated industry. So you see a lot of police officers who become truck drivers. You have DOT, FMCSA regulations. You have weights and measures. You know how to follow regulations. So you get into that. So real estate, while I think Mike might have a different opinion, I think there are people that work in law enforcement who are dynamic. Like, look at Mike.
Would love to meet those.
You want to talk to him. Like you just that guy you want to know, right? So it would make sense if Mike got out of law enforcement where he can use his appearance to de-escalate, to calm people down, to talk to someone about real estate as an agent. So maybe as a future job, Mike, you might excel at something like David Green does that really well. He's got people skills. So I think that's why you'll see a lot of law enforcement ex-officers in real estate, is because it's a people business, and law enforcement is a people business.
Yeah, I mean, your network equals your net worth. Real estate agents and anybody even tangentially involved with real estate, it all comes down to how many people you know, who you can talk with. Guess what I have to do every single day? Go talk with people. And I have to talk with people who don't want to see me. They're not happy to see me. In fact, they're pissed off somebody called, or they're mad that I stopped them and blah, blah. And, I try my very best to make everything a positive contact. My captain has a great saying. He's like, the credibility of law enforcement, the reputation of law enforcement is built or destroyed one contact at a time. So you have to do your best to give everybody a somewhat positive experience. And yes, that even includes when you arrest somebody. Yes, that even includes when you write a ticket to somebody, the way that you treat them, if you treat them fairly, if you're kind, if you're courteous, if you're professional. Most of the time, they understand if they've done something wrong and they're going to go to jail. But you can still, can't tell you how many times I've heard, thanks for not being a jerk or some form of that. And, that's just how you interact with people. I think that law enforcement officers and military personnel have an unfair advantage when it comes to being landlords. Dion's a former cop. My mentor, Mark, was a police officer for over 20 years. I'm a police officer. I'm part of an investment group. There's a bunch of military and law enforcement guys in it. We have seen the worst that society has to offer. I've been into so many hoarder houses and had to be there when children are taken away because the family members are using illicit substances and things like that. I mean, just horrible, horrible situations, the worst humanity has to offer. You really think some tenant not paying me and breaking a house is going to scare me? I'm just not afraid of it. I'm not afraid of risk. And I think I talked about this with Matt. It might have been Matt and Dion last week when I said, if you've ever had somebody point the firearm at you and pull the trigger, there's not a lot left that scares you. So I'm not that afraid to get started investing. If I lose everything and I become poor again, I've been poor before. If the whole house burns down to the ground and the tenants are just like miserable nightmares, well, it's just another day at work for me anyway. So I'm really not that stressed. So I think we have an unfair advantage when it comes to that. And that's probably why you see a lot of cops get into real estate related jobs.
I would have to agree. I think a lot of times dealing with people who've been in really stressful situations, even somebody who's been in a bad car wreck or through a really bad divorce that just tore up their life. A lot of the times when people say real estate's scary because of tenants, toilets, and termites, most of the people that have been in those situations where something bad has happened in their life, they're thinking, come at me. How bad can that be? And then here in the chat, I put in the sponsor of today's video with a link to, in case you like to drink something like, Mountain Dew, not mixed with alien vodka every day, but you can't drink all day unless you start early. You don't want it to get watered down. So the sponsor of today's video is Bullet Ice Cubes. These are restaurant grade. The link is in the comments. It's how you keep your drink nice without, and when there is some, it's very sad when there's none left though. Keep it cold without watering it down. Love it. Rusley, howdy. Eric, howdy. For your rental portfolios, what asset protection steps have you taken? Any recommendations on what steps to take? I do have some, but I'll let you go first, man.
Insurance, an umbrella policy, renters insurance that we request for the tenant. I can't think of really any others. And when stuff breaks, you fix it. It's fairly straightforward. We have properties that we've rehabbed in the last, 8-9 years. We're going back and we're placing a huge order for smoke detectors because they have to be changed out every 10 years. So we're probably going to have to buy 80 or 100 of them.
And that sounds scary when you're starting out thinking of 80 or 100, but multiply that by the cash flow of that many units.
Yeah, it's a rounding error.
It's a rounding error.
It's not.
So asset protection, a lot of people usually refer to LLCs, which provide no asset protection unless you have partners. In some areas, they can pierce it if you commingle finances or if you have a creative attorney on the other side. In the counties where I invest, they are disregarded. They are not pierced. They're just flat out ignored. They use the 1996 precedents of the IRS saying all single member LLCs are a disregarded entity. So it provides no asset protection whatsoever. I know Lumberjack Landlord uses a trust, but that protects the assets going from him to his heirs more than it protects him while he owns them.
That's right. Just up on insurance.
Yep. There are 3 forms of asset protection that Matt touched on. The first one is homeowners insurance. You're going to insure the property with a certain amount of injury protection. Most of us have $300,000 for slip fall injury, and then full replacement value of the property. So don't just cover the price of the mortgage to make the lender whole. If there's a problem, if it burns down, you want to be made whole yourself. So they'll rebuild the property. And then at a certain number of properties, I probably should have done it at 3, but I did it at 4. At 4, I got an umbrella policy. So if any claim goes above the amount that the property is protected, my $2 million coverage kicks in. So that's the first one is insurance. The second one is leverage. I own 7 properties with 16 rental units, and of my 7 properties, 6 have mortgages. The bank is in first position. So if I'm sued, they're not going to get that property because the bank actually owns first position. And then the third one, the most important, in my opinion, is the one Matt touched on. Actually fix stuff. Be proactive. Tenant calls with an issue that sounds anything safety related, it gets fixed now. If they call with a squeaky something, it gets fixed when you get there. But anything safety related, do walkthroughs, do inspections. I like to rent to Section 8 because they also inspect. So I actually know not only me, but an uninterested third party has written a report saying everything there was good, which is in your favor.
The other thing that you can also do too is for usually a little bit more money, you can actually get rental reimbursement on your fire policy. So it's usually not that expensive. And, you know, a lot of cases, especially now, if you had a fire, it could be 90 to 120 to 150, 180 days before you're back online. You don't have to lose any of your income on your rents if you just make sure that you have rental insurance coverage as part of your policy.
James J. This is probably a good question. Howdy. This is a good question for Millennial Mike and Matt. Because I think I have a contrarian viewpoint. Hello, gentlemen. How much emphasis would you put in a good school district when buying a long-term buy and hold single-family house? We'll start with Millennial Mike.
Well, that's a good question. You know, I actually put a ton of emphasis, on getting a house. The house that I house hack, the duplex that I'm in, is in a very nice city in Pierce County, Washington, just south of Seattle. I'm in one of the best school districts near the lake, nice yard. Put all of this care and effort into making sure that I had something that's going to be very attractive to families that wanted to have kids that go to the school district. And in the 4 years that I've owned this property and the tenants that I've placed, I've never had anybody who had a child. Nobody, not once. All of that work and effort and everything was completely for naught. So, I mean, it still benefits me because people love the property. It's in a great location. It's by the lake. It's so people want to come and live here. And not one time have I had anybody under the age of like 25 live next door. So the only kid that even lives here is my own. Anyways, I think it's a great idea. It's a great strategy. You'll be able to market it to families. It could work. But at the end of the day, I'm still looking at yield. And realistically, whatever the yield is on properties, so far down on my list of differentiating factors is what school district the property's in. There's a bunch of other things that are above that matter more to me. How old the roof is, what the foundation looks like, what's the yield going to be, what are the rents like, what's the neighborhood like in terms of safety compared to other neighborhoods. So, but you know what? I invest in Gary, Indiana. That might be a completely different thing. It might be a lot higher priority for Matt and his market.
Matt?
Don't care.
Maybe not.
Yeah, couldn't care less. I've never ever looked at school rankings to figure out if I was going to buy something in my 3 towns. In fact, I'm proud to say that one of the towns I do business with is the ugliest town, was just rated the ugliest town in all of our state, all of New Hampshire. It's the ugliest town. So
like the town is ugly, or the people of the town? Like they said, these are the ugliest people in America. Or
I think that was part of the ranking, but
What?
I know the town was ranked the ugliest town in New Hampshire.
Nice.
And my margins there are phenomenal. So I don't care.
So here's why I thought I would have a contrarian view. So Matt doesn't care. So I can't be contrarian to that because the unnamed arrow never misses. Mike, you cared about it, but haven't benefited from it. Now, the reason this is going to sound a little scripted is because I have a video half scripted because I was going to make this video. I'm going to make this video, but not today. The reasons why I don't want to invest in a good school district. I don't like tenant turnover. My goal is to put a tenant in place and have them stay there until they either pass away or I help them buy a house. If you're in a good school district, is it a good elementary? Is it a good middle school? Is it a good high school? At what point is that parent going to go, school district matters to me the most? So if my kid has now changed age groups and is going to the next school, I'm going to relocate renting to the better school district for the next bracket of schools. I don't want tenant turnover, and tenant turnover comes from being in good school districts because eventually the kids are even beyond school age. And then the parents either empty nest, downsize, or go get their dream house. Whereas I have tenants in place, and in 10 years, I've had a total, including the 2 from the last 2 months, in 10 years, 4 tenant turnovers total. And one of the strategies is, and I need to add this to my criteria of, I don't want to be in a good school district because the draw there is the children, which, Mike, you're super happy. I'm super happy for you that you don't have tenants under 25 because I've never had pet damage. I've had a ton of kid damage. I have a tenant with three kids, 4 bedroom. All the doors have holes punched in them.
Mhm.
Black taped over. I went there to fix something. And well, handyman went there and sent me a picture. So I'm too lazy to actually be there. But I reach out to her and I say, hey, do you want new doors? And she goes, no. That's going to come out of my deposit, right? And I said, yeah. Okay. Well, if you put in new doors, they're going to break them.
Mhm.
Then I'll have twice as much coming out of the deposit. The doors do what they're supposed to while we're here. I'm like, yeah. So kids break stuff.
Mhm.
It's possible that pets can. I've got a tenant with a pig. Like no damage at all whatsoever to the property. Yeah. So I would rather have pets than kids. And so if you went for school district and don't have kids, consider yourself lucky. Robert, howdy. Just the distraction I needed from work.
My man.
Mike and Matt agree.
Yes,
This is the distraction they needed from work.
it's true.
Ring seeker, Matt, how do you pick your market and investing style, Matt?
How do I pick my market and investing style? So my rule is I never wanted anything more than 20 minutes away from where I lived. Period. End of story. I knew I would self-manage. I knew that even in a day where I might not self-manage at the end of my career of investing, I knew that I would still want to be able to do a drop by and check in. Hey, how's it going? Why is that like that? So I want to be able to do that if I decide to turn it over to a property management company, because they will be washed like a hawk for the first few months that they're that for me. And so for me, it was where I did all of my research based on what I was looking at was colleges, because I believe that a lot of students get a bad rap. So I was looking at colleges, and then I was looking at college towns that provide less than 60% of the housing for their students. And I was lucky enough to find a college that provided 51% of the housing for their students. So 49% of the housing, 49% of their students didn't have housing. Then I start looking into the town, and I start finding out that that town is basically a cottage industry of, we don't want anything more than 3 people unrelated living in the same home. So I was like, great. So now all the cities or towns around that, that's where everybody's going to want to live, because you can't put more than 3 people in a building in one of those places. So I started looking at the other towns. I picked the town that I did, and it took 8 years. I think it was 8 years, but now for the last 5, no, it took 10 years, but now for the last 5, it's been the fastest growing city in the state of New Hampshire, 5 years in a row. And so my multiples on what I bought for, because I did my homework before, are ridiculous. I was buying duplexes for 150 grand that are 500 now. So
It doesn't suck to be the one who owns those, though.
it really doesn't.
No.
It's quite choice. I recommend it.
Chester, thanks again, gentlemen. I'm about to head out in a bit. Great work and valuable insight as always. Kedma, howdy. Any of you established LLC? I know Dion did not. What is your reason for or against it? Does an umbrella or more umbrella policies give you what you were looking for? So Matt, you kind of answered this. We'll start with you.
I have an LLC, but it's not for property. Sort of.
for your
What it
insurance.
basically, what's that?
It's for your insurance, right?
Yes. Yep.
Yeah.
Yep. So for us, when I retire, I need to have specific insurance to make sure that my daughter can see all of her specialists. And so in order to do that, the only way that I can get access to that is not through the exchanges, but I can get access to it through small company plans. In order to have a small company plan, you must have a small company. So that's where I open up an LLC, hire an employee, because you have to hire at least one employee, and it can't be someone you're related to. So I am not related to him, other than maybe 8,000 years ago, but I'm not related to him anywhere near it. And so that's why we did an LLC. And so the challenge with that is you then have to have the LLC able to generate income, and in order for me to be able to pay him. So what I literally have to do now is I have to actually have the LLC invoice my trust for the work that was done, and then my trust will pay the LLC. That way there's no commingling of funds, and they are 2 separate entities. But that is essentially how I will pay for everything, is that I have to have the LLC invoice my trust.
Who walked you through the steps of setting up your insurance that way?
An insurance broker.
So find a broker to walk
Health
you through.
insurance
That's your issue. Yeah.
Yeah, you want to find, so it was two pieces. One, I made sure that I set up the trust with an attorney, because there were questions that I had about the trust and how to make sure it was good and legitimate and done the way it was supposed to be done. Two, I had a conversation with my CPA and my EA, which is CPA certified public accountant, EA enrolled agent, which is a step above a CPA because they test annually on the new IRS rules. So I had to have that conversation with him. I had to pay him for an hour of his time. He is absolutely one of the best in the business, but he laid it out for me of this is what that structure has to be. And then lastly was I had also talked with a health insurance broker, and the health insurance broker says, this is what you have access to via the exchanges. This is what small businesses have access to. So I would recommend a small business.
Millennial Mike, thoughts on LLC? Do you have one? Do you want one?
Yeah, so I don't have one. And I have a little bit of mixed opinion. So I interviewed my CPA, guy who does my taxes. He does a lot of real estate investors' taxes. He told me it's about 50-50 for investors who have them and investors who don't. Like Dion, I agree. There is no tax benefit at all to having an LLC. The IRS says it's a disregarded entity. You don't get any benefits for having an LLC. Every tax advantage you can get as a business, you can still get as a regular person, or get as an LLC and get as a person without one. So from that purpose, there's no reason to it. Now, when it comes to liability, is it going to help you, I guess, limit your liability and not be able to have the veil pierced or whatever? Well, that's where it starts to become an argument, because you'll hear some attorneys, and attorneys who want to form LLCs are obviously always very pro LLC. What a surprise! It's in their best interest. But I really have not heard of real estate investors say, thank God I had my LLC, or I would have lost that lawsuit and had to pay out a whole bunch of money. I haven't heard anybody say that. I've heard real estate investors say, I have an LLC so that I don't have to pay out a bunch of money. But I haven't heard of anybody say, thank God I had it because I actually went through a court case and it actually protected me in this case. So I have mixed feelings on it. Is it something I'm totally against? No. Would I do it? Maybe. Is it like the final cherry on top of the sundae? Maybe. I think you're a lot better off doing what Matt says, which is actually fix things and make sure your tenants don't have problems with you. Have good insurance, be a good landlord. That's probably going to do 95 to 98% of the work for you. Go ahead, Dion.
Meet Kevin has a couple videos on how having an LLC screwed up his court case.
Really?
Yeah. On some levels, it actually makes you more likely to get sued because a sole proprietor doesn't have as deep pockets as a company. And when you have an LLC, it looks like a company, but you can't represent yourself in court. Your insurance costs can go up. Your all kinds of your interest rates are different. You're buying properties in Gary, Indiana. Some of them you're buying cash and then fixing up, so you're not carrying a mortgage on it. But your interest rates are worse with an LLC. Your lending is worse. A lot of people say, well, just buy it in your name and then move it into your LLC and hopium, live on hopium that the lender doesn't care.
Don't do that. Yeah, don't do that.
So, Mike, you have, the last I counted was 7 properties.
8.
So you have 8 properties. Matt, you have 36 properties.
41.
So you guys are growing. It's easier for me because I had one a year, every other year or something. It makes sense right now. If you said, I'm going to go and add an LLC, here's a $300 or $400 a year charge, and here's some more record keeping. Totally fine. Who cares? That new investor that doesn't have a rental and doesn't know how to name an LLC, pay themselves from an LLC, file taxes for an LLC, get lending in an LLC that doesn't have a history, like all the barriers that it puts in place, can't house hack, can't owner occupy, like all of these problems. That's who I care about. Anybody who has 5 or 6 properties or 121 units, go for it. Knock yourself out. Pay your CPA extra for no reason whatsoever. Make an attorney happy and give them several hundred dollars a year for no reason. But when you're just starting out, that's where my blood boils, because people are being stopped in their tracks by thinking I need an LLC.
Yeah, we made it 21 years without one. So we're okay.
You see it all the time in the comment section on BiggerPockets. Like, hey, I'm very interested in getting started in real estate investing. So should I do an LLC first before I start looking at houses? And you're right. It's an additional obstacle that's not necessary. And people just have a misconception.
So many people pop in and go, you have to. You'll lose everything if you don't. But like Mike said, I've never heard of somebody say, I got sued, and because I had an LLC, everything was great. Your LLCs are your assets when you get sued. Robert, howdy. As a person with 4 units, would it be better to try to renovate to max out the rent or keep unit as is and build cash pile for next unit? There's probably 3 different opinions here. Start with Matt.
It really depends. Dion and I talk about this all the time off camera. I mean, and it's the one time he's like so superiorly wrong that I wish we recorded it.
I'll argue with you now. We're recording. This is in the future world.
Yeah, I think at the end of the day, it really does depend. There are markets that you don't see an appreciable difference for a rehab unit. You really need to know your market. And that's why I do a rent box. When I run my rent box, I see that an A quality rehab in a B area gets me $300 or $400 more than the B quality in a B area. So because I track my rents, because I'm tracking what's in the market for availability and seeing what the guys that are always pushing that top number higher are the ones that are the top of the line rehab or brand new. They're the ones always pushing it. So if I want to be in their club, I know the level by which I have to do my rehab. The question is, how much is that going to cost me? And how much more rent is that going to get me? Does it get me $100 more a month or $500 more a month? That's the algorithm. That's the formula that I put it through, because ideally I have both. I have buildings that we bought, but because of the opportunity, we gutted, we redid them, we put them on the market. They were brand new. We also have stuff that we bought where we have existing tenants in it. I'm not kicking out tenants to rehab a unit so I can maybe get a little bit more rent. I'm going to binder strategy them, my version of, and get the rents a little bit higher and create a smaller delta, because I'm not doing the rent box for them. I'm doing the rent box for me. So I'll talk to them about, this is what this looks like. And again, if it's $100 difference, so I've seen somebody in a market that I don't do business in, they spent way too much money. And when it was all said and done, they got about $100 more a month. And I said, that's really lousy. And they were like, why? I was like, really? Let me help you with math. You're going to make an extra $1,200 this year, maybe next, probably the next. Let's just say it's about $1,200 a year for the next 5 years. So you're literally going to make about $6,000 in the next 5 years. And you spent $40,000. You're dumb. Like, that's what it is. It's dumb. It's a bad investment. So you have to look at what it's going to allow you to increase your rents to, how much money you're going to have to spend to get that much closer to, what I call Icarus, what I call the sun, and what that gap is going to be. And then that should help you make your decision. More often than not, I much rather buy the next property. More often than not, I'd rather buy the next property because it's another income producing asset that's usually bigger than the delta.
That's a good summation. I agree with that.
So I'm the only one here who uses a property manager. This is a great conversation to have with your property manager if you're using one. This is a great conversation to have with other professional expert investors that are in your area and know your market, because they are much more educated on what will happen in your specific case than I am or than these fellows are. So it can be beneficial. I have remodeled several units after a tenant moved out, but usually it's because I'm spending somewhere in the neighborhood of $5,000 to $10,000 and looking at a $400 a month rental increase. I'm going to recuperate all my money in a year, maybe a year and a half. It will have already paid itself off. If you're going to pay yourself off 15 years later, well, guess what you need 15 years later? Another freaking remodel. So sometimes it's worth it to bring your unit up to a higher level of quality because maybe that's the competition in your area. You need to get better rents. Sometimes it's not. I can't tell you for sure, but I know who can. You have to do the work to go talk to those people and network with them.
I'll add something real quick to that, Dan, before you jump in. So real quick, I would try to rent it out with the tenant that's there. That they're not renewing, post it, see what you'll get for today's rent. You could get the number you thought you were going to get redone. You could get that number right now. We admittedly, after our first few that we looked at, we we're like, yeah, we'll push the envelope a little bit. We'll go market. And then we started going 10 over market and 20 over market, and we were still getting amazing, amazing tenants, amazing applications. I was like, we're 20 over, and the number that we assigned to it was 20 more than what the last tenant paid. So it's 20 plus 20. So just do that work first, try and rent it out first, see if you get any showing, see if you get any interest. If you do, maybe you get the number without the rehab.
One of the whole reasons the binder strategy exists is because I've never done a rehab. When I have an empty unit, I'll do flooring and paint. I've never done cabinets. I've never done bathroom remodels or kitchen remodels. I would if it like had problems, but if anybody uses this word, I stop listening to them. That's dated. Nobody will rent it. I have a building built in 1921, original interior, new electric, new plumbing, rents with no problem. Never had a vacancy. Get the same as area average rents. No one cares about that in my area. If you're in an area where it matters, do the work and know what the rents are there. I do have a friend who listened to a friend, just spent $28,000 on a rehab for a $200 a month increase. I would have spent $5,000. I would have done flooring and paint. I would have spent $5,000 and probably got $200 less. So $23,000 invested for $2,400 a year.
It's a 9-year ROI.
It's a 9-year ROI. When it
not
will
worth it.
probably need all redone.
Maybe. Better hope for some even faster rent escalations, and then maybe it's a 6-year.
That would be the hope that rents go up. Yeah, exactly.
Yeah.
They're still making money. Like it's even,
Well, yeah.
both
sure.
outcomes were good. That's the hardest choice to make.
Exactly. Yep. It's just lower margin. But that's the other thing too, is when you see what your market is, they just put in a super high-end place, new building in one of my towns, 144 units, and the average rent there. So 2 bedrooms rent for $3,000 a month. That's ridiculous.
It's ridiculous, but what someone is willing to pay.
100%.
That's
Well,
the
so
rent.
on that trade down though, I'm still redone, but I'm that trade down to like 2,400, because then in my market, those 2 bedrooms can go from, kind of 1,400 all the way up to that 3,000. So it's a really big range.
I have a completely unrelated question.
Yeah.
The streaming service keeps popping up with, now would be a great time to insert ads. What the heck does that mean?
I haven't done it before. I mean, you could
Trying to make
try it
money
and see if
off
it
you.
breaks anything.
I'll wrap up at the end with my ad for today's sponsor at the very end, because we're almost there. We're going to be wrapping up. I put a comment in, so everything above that, we're going to answer. Everything below that, we're going to say, come next time.
Got it.
Cashflow Johnny Ramirez. I like Valparaiso, Indiana, right next to Gary.
Yeah.
Nice. Cool.
Big college town.
Okay, cool.
Big
Indiana
college
sounds like a
town.
real place.
Yes.
I went to school in America. We don't learn geography.
Yeah.
Whatever. If you haven't driven through it, you don't know where it is usually.
Yeah.
Roberts. We're talking spending $200,000 to get 2,000 or stay at 1,600. 20,000 to get 2,000.
Oh, 20,000 to get 2.
20,000 to get 2. So you're getting a $400 increase per month for $20,000. That's kind of close to what my friend was doing. 8-year return.
No,
So-
it's 4. No, so if it's
400 extra dollars a month.
448, it's 4,800. So it's 4. It's 4 years.
4-year return.
4 years. You're like, that's like almost right on the line. Like I like to see it I like to see it at 2 years. If I can squeeze it in under 3, yes. So you're kind of right on that line. It depends on what the acquisition cost is for another building. If the acquisition cost for another building is 100, then I would probably do the rehab. If the acquisition cost is, where, i.e. 100,000, meaning that's what you need for deposit. If it's 40, then you're halfway to the deposit. I would probably hold off.
Yeah, and how much are you going to spend if you don't do the full rehab? And are there some small things that you could do? Because rent increase is only one aspect. Tenant retention is the other. How do you limit tenant turnover? And there are some small things that you can do that don't increase rent, but help a tenant stay. Like having a dishwasher.
Mhm.
Having or not having a dishwasher in the areas that I rent doesn't generally change the rent. But the tenants at a place with a dishwasher tend to stay longer.
Interesting.
So Jerniel Diaz, howdy. This is an interesting question because I don't even want to use the guy's name because it's childish, so I'm trying to avoid it. Nice to see you guys here this afternoon. Any chance of holding this debate with that mindset guy? Would you love to see you guys crush him? I don't want to crush him. I want to point out he's got good data if you're a lender and you want to know how lenders work. If you're trying to be an investor, he's not an investor. He's better at YouTube than we are. He's getting videos because he makes crash videos. He gets more views. So if you want to grow a YouTube channel, great idea. If you want to be a lender and you want to have to work and you don't want to know how to invest to make work optional, follow him. If people call for a crash long enough, they will be right.
Yes.
But they will have costed you everything you could have gained between now and when the crash happens. And the people have been calling it since 2013. Have both of you seen me read off every single year, the thing that happens? There's been a reason every single year why the crash is going to happen. And it's totally different this time and no one is expecting it. No one knows what to do. If I
Negativity bias.
Negativity bias. If I listen to any one of these years, this makes me very sad inside. I would have to work.
Yes.
What's
Yeah.
that like?
Yeah.
I don't even
Pass.
remember. It's been 2 months.
Hard pass. Yeah. Let me remind you, hard pass.
Hard pass, right? I would love to do an open debate with the guy. I would like to say, look, I respect what you're doing. You're very entertaining. You make great videos. People like to watch you. Maybe have an actual, I like that he clarified. A first-time home buyer should be watching different content than an investor. He said, if you're a savvy investor, which everybody watching, the goal is to become a savvy investor.
Right.
You shouldn't be watching our channels if you're not trying to become an investor. Like, he's got a point. I agree with him.
I am not an institutional investor. That's what that's what we were continuously called. Institutional.
Oh, I only heard savvy, so I messed up.
Institutional, and that is, we are not that. We started just like everybody at zero, not handed anything, built it from nothing, started at zero.
The second he called someone else's content crap, and didn't back it up with this is why it's crap, and said, the guy's weird because he's got small dogs. How many people watching right now? If you have small dogs and you watch that channel, I think you're a hypocrite. He said anybody with small dogs is a weirdo. You couldn't watch somebody who calls you a weirdo? Still like to debate the guy.
For the record, I did send him an email and say, hey, can we have a live discussion? If you don't want something edited, do it live and have a discussion or a debate, your choice. Straight ignored. I'm gonna send a follow-up.
I would want it
It's
to
been
be
6
live.
days.
I wouldn't want either side to be able to edit.
Right.
So Chester, would cash on cash return on investment be more important than cash flow when the actual cash flow is significantly better than a property with a significantly higher cash on cash ROI? So I'll answer quick and then turn it over to Matt because he's got the math brain, I think, between the three of us. Cash flow is important if you're making a small enough down payment for the cash on cash return to look amazing. You do a 0 down VA loan and wrap the closing costs into the loan and you make $10 a year. That's an infinite return. Looks amazing. Is $10 a year worth the headache of managing a tenant and a property, or managing a property manager to manage the tenant and the property? So no, I would say cash on cash return doesn't trump return on investment if it's because you're making such a small investment. There might be times where if the cash on cash return was better on one property than another, but the cash flow meant significantly more and you were retiring and not adding any more or something like that. I've looked at that myself. But when you're growing, I would be investing for cash on cash return over cash flow. But Matt, you've got the brain here.
Well, I mean, I think, so one of the very few things that I disagree with on Zubon is that if he can buy a house with a 12% return or a 20-unit apartment building with a 10% return, he'd rather take the house. I prefer not that. I want the bigger asset because even though it's a smaller percentage, that building making 10% is probably $8,000 a month. That house making 12% is probably 600. So at that point, I want that bigger nut. I look at it being comparing apples to apples. And if you're comparing apples to oranges in that case, I'm not about the return. I'm about what's my cash flow position on that asset, because I care far more about the big number than I do about, the percentage and looking at my portfolio and saying everything's 12%, if that makes sense.
And ironically, I would put myself right in the middle. Okay. I want cash flow. Mm-hmm. I want the better return. Mm-hmm. I want the fourplex over the single family. So I'm not aligned with Zoo because I only wanted 10 or less mortgages in my name, but the number of units scaled. But I don't want over 4 units because I want 30-year fixed rate debt. So like there's a version of this that works for everybody watching. What matters to you? What's your goal?
Yeah, the key is also, and that's the big thing. I mean, you brought it up perfectly, Dion, which is the debt structure. The debt structure. You can get 30-year fixed rate debt on 20 units now. And so because you can, it's just what's that rate of return? If that takes it down to a 6 and the single family is a 12, yeah, then you're doing the single family.
I also have this varying opinion. I like that we're not an echo chamber. I don't want a 10-unit place or a 20-unit because my portfolio is so small that would be too many tenants coming from the same economic drivers.
Sure.
A plant, a base, a port, or something shuts down, I'm dead in the water. I want the duplexes that are spread out, pulling people from different sources, so several things can change. So that's why when a question like this comes up, and I see Chester has more here, like say, for example, 2 4.3s, first is 11% ROI, 400 cash flow. Second is a 9% cash flow, 650. Which one can you get? Make both offers, go for the one that gets accepted. In that case, it's so close to me that it wouldn't really matter. You develop a strategy, but then you make decisions based on opportunity. If I only am going to buy a 10% cash on cash return, and I only want single family houses, I wouldn't own one property. I've never seen a property in Washington State, a single family that would cash flow at all, let alone a 10% return. Right. So based on opportunity, I then shifted to small multifamily. And in some other areas in Gary, Indiana, it's probably single family that outperforms small multifamily or whatever the local asset is. Jay Hayes, Millennial Mike, how do you overcome the negatives of investing in Chicago? I'm not trying to throw shade. I'm just really curious. How do you accomplish this? And remember, Chicago is like Los Angeles. It's not an area. It's a freaking area. You have cities within cities within cities that makes up Chicago. So if you have a negative area, one part of Chicago, you have a bunch that are amazing. So where are yours at?
There you go.
Matt's actually talked to me about Chicago. He doesn't like Chicago at all.
I went to South Chicago and I spent a summer with a Polish camp.
Yes,
it was amazing.
Congratulations.
It's
a nice place in Chicago.
Okay, it was so that's my memory of Chicago.
So
memories.
I was a rep there for 7 years, having to walk the streets in the wintertime with the wind coming off they think is a lake. F that. That's not a lake. That's not a lake. When you have 4-foot waves, that's not a lake. And so it was, I did not enjoy my time there, and I did not enjoy my time in the city there. But I still love the pizza for what it's worth.
So the same thing, the same advice that I've given many times, I look at who do I know, who's in my network, who do I spend a lot of time talking to that's very successful. And I have a good friend there. His name's Dominic Casteris, has been on my channel. He's a high school history teacher. He's been a history teacher since the 1990s, and he's got 56 rental properties. And I'm like, Dom, why don't you just retire? He's like, well, I got the greatest job in the world. I get to teach kids about history all day. Yeah, sure, you betcha. Well, great, Dom. I'm happy for you, man. That's fantastic. And he's just sitting there until he gets his pension, because why not? There's one more layer of security for you. 56 rental properties. Anytime somebody comes into your life and they own 56 rental properties and they want to talk to you or give you some advice, you should probably at least give them the courtesy of listening. And he made a compelling argument. He's like, hey, this is what I do. And I actually went out and visited with him when I visited my properties in Indiana. I saw the houses he's at. I saw the neighborhood that he's at. He's asked me not to share that publicly because he's like, oh man, this is like a little hidden gem of working class blue collar guys where I grew up. And all right, fair enough. And it's a great little area with nice little houses, and they turn a really good profit. They're beautiful, well kept, well maintained brick houses that were built in the 50s. And so, yeah, I decided to purchase one there because I built off of, and of course, I knew him for a long time before we ever built anything there and developed that relationship. And again, it's only about 30, 45 minutes from where my other stuff is. So I wasn't really as worried about building all of the new connections in the new market. How do you overcome negatives? It's the same way you overcome negatives in anything. It's going to suck to be poor. There's going to be problems. It's going to suck when you're rich. There's going to be problems. It's going to be miserable if you don't go ask the girl out because you're lonely. And if you go and you ask her out and you get rejected, that's going to suck too, dude. There's always going to be negative things in life. And you just have to develop the type of mindset where you can overcome negative things. You just brush them off. You move through it. It's part of the calculation. It's part of the plan. You're going to come up against bad things. So dude, get some perspective. What's the worst that can happen to you? I mean, really, what's the worst thing that can happen to you? Your house burns down, turns out they're just cooking meth in it or something. I mean, what's the worst thing that could happen? Is that really going to end you? Is that going to ruin your ability to be a real estate investor? You know, if you're that afraid of the worst case scenario, then maybe it's not for you. But if you can wrap your head around it and recognize the world moves on, you're going to keep breathing, and you'll figure out a way around it. And I mean, I'm not saying make a bad decision, but just, dude, you overcome negatives with optimism, belief in yourself, preparation, and then perseverance.
Owning in Chicago, you're going to be able to do all those things.
Yeah, thanks, buddy. Appreciate that. I'll let you know if we have a drive-by or something, all right?
This is where I'm going to lose the few subscribers that I'm thinking might have pushed me over the 11,000 point.
You may.
I wouldn't own in Chicago. I wouldn't own in Chicago because of the gun control laws. Like, if I can't go somewhere carrying a firearm, I'm not going to buy there. I mean, I couldn't even sponsor my videos.
Some people carry guns there all the time.
Some people do. Anyways, this is not political. Let's deconstruct the segue. Chester Williams. I suspect cash flow is more important, so he agrees with Matt. But I'd like to hear what your guys' opinions, which we shared.
Yeah.
Afro Capitalist. Mike, when you're investing in out-of-state markets, how much do you rely on your resource team to learn the area, or do you try and learn the area yourself?
So you have to do both. You have to become the foremost expert of your niche in your area. You have to, I mean, for me, I'm extremely knowledgeable on 3-bedroom, 1-bath houses in Gary, Indiana that I've talked about earlier in my buy box. I need to be the expert. But you also have to rely on the expertise of your team. But building a team, when you're going to be a real estate investor, you are a leader. Like, look at Matt, look at all the people and moving things that he controls, and look at Dion. I mean, as much as he likes to joke about being lazy, he's not actually lazy. He's just a very good leader. He knows how to get things done using all of the proper pieces on the chessboard around him, right? You have to be a leader, and the ability to find and develop and recruit and train, and then most importantly, retain good team members. When you build a team, that's the hallmark of any good leader. So think of yourself as a leader. It's your job to go find good people, train them up to do what you need to do, and then retain them because you're a good person to work with or work for. It's the same thing that we do on a SWAT team, same thing you do on a sports team. You're the leader, you're the captain, you're the CEO. And if you develop this team, then you can trust their expertise, and you're not as stressed and as worried and doubting everything they do and having to micromanage everything they do. So yes, when I talk about networking, develop a team to the point where you can trust their expertise and trust them to fill in the gaps that you're not capable of filling in on your own. But that does not remove from you the responsibility to be an expert in your own market and on your own craft.
Nice. I suspect Matt will have the answer to this next question better than I will. I will take a guess first, and then I'll pass it on to Matt.
Okay.
William, howdy. Per loan officers, soft pull credit checks don't hinder your credit score. True or false, or sales talk? So here's my opinion. Credit scores are confusing on purpose. You have the 3 chart, the 6 chart, the thing the lender sees, the thing you see, the thing Credit Karma sees, and none of them match. So a soft pull might hit the one that you can see, but it isn't going to impact. A soft pull isn't going to impact the one that the lender sees, because that only has it has different things. What the lender sees, they're probably telling you the truth. I ran a soft credit check and it hasn't impacted somebody's credit score. But what you see on Credit Karma, the free sites, it might be there and it might be a 6-point impact. Matt.
Yeah, soft pulls don't. And in fact, if by chance you see it show up on your credit, you can actually show that to that entity, and you can talk to somebody and have it taken care of, because they can always pull back the credit check if for some reason something was done wrong and they said it would be a soft pull and then somehow it was a hard pull. But soft pulls don't touch. They don't affect your credit score at all. And to Dion's point, yeah, even if it's a hard pull, it's usually 6 points. It's nothing crazy.
Thank you. And this next question, I think Matt's also going to have the answer to, because he lives in Siberia and this might actually matter there. Robert, comparing rentals with crazy energy prices, how should I compare heating prices? An example, say the rental next door was basically the same, but used heating oil instead of propane. Would that mean comparing rentals would make mine worth like $200 to $300 less because of the reduced fuel cost using IBC versus oil tank, less oil? So in my area, before you jump in, Matt, heating and cooling is harder to do in a mobile home So the rents are usually lower there, not only just because of the type of structure, but because those expenses are going to cost more. But we don't have a big enough degree change in temperature here for energy cost to really be a factor when it comes to rent. But in Siberia, Matt,
The 9-degree average difference in temperature, 9 degrees between where you live and where I live. 9 degrees.
yeah, but okay, so let's take
9
out,
degrees.
let's
Busted.
take out the main days.
Yeah.
In the winter, the lowest I've seen here in over 20 years was 6 degrees. Never seen a 0, never seen a negative.
Yep. We
I don't
usually
think I've seen a year where you don't go negative.
probably about 9 degrees. So if you see a 9 or an 8, we go negative. So say 9 degrees. For heating, it's really hard to calculate because you basically have to figure it's 3 pieces. It's the building envelope, it's the system that you're using, and then it's the fuel. It's not just the fuel. It's the envelope and how well it's insulated. It's the unit and how efficient it is. Steam heat is typically 80 to 82% if it's a brand new system. If it's an older one-pipe steam system, it's 78%. If you're using a 95% AFUE on-demand hot water through a 40% increased airflow slant fin register, then it's a completely different algorithm. It's a completely different calculation. So it really only matters if you can count for all 3 things, which is what are you counting on when it comes to your building envelope? Was it insulated? Wasn't it insulated? And what was it insulated with? That's where age of home comes into account. And then the system that's being run through, is it an older one pipe steam, which might be 75 to 78 percentage AFUE, or is it a on-demand combi boiler that's 95% like a IBC? And then lastly, then you come to fuel. But that's all going to be out of shape this year as well. Natural gas could be higher than oil this year. It's impossible to say. It's impossible to say. People thought for a long time, ooh, it's oil. Ooh, yeah. But it's a much more efficient system than the one in the house that you're living in. So it comes into all 3 things. Good deal.
So I would look at your local market, just like you're trying to figure out the area average rents for a 2-bedroom versus a 3-bedroom. Look at the difference of the properties that are listed that have one source or the other. Understand that tenants are going to be paying those utilities is the goal. But how much do rents adjust in your local market based on your rent box?
Mm-hmm.
Andrew P. Howdy. How much are 401k or brokerage accounts valued when the bank is looking at your debt to income? They are not, and they are. Is it really just about the debt to income, or are your stock portfolios considered too? Thanks. Your 401k is not an income producing asset. It can count as a reserve. They'll look at 50% of it as that can be counted as a reserve. You don't have to tap it or take it out. You just have to prove that it's in there and it's seasoned. But your debt to income ratio is on your sources of income. So if you have a brokerage account that has dividend stocks and you have a history of those dividends paying a certain amount, they might consider that in your debt to income, but it's not going to be a retirement account. I'm going to get through these questions really quick here and wrap it up because we're past Mike's bedtime. And there is some bunch of comments here. Where did I go?
You're right after Andrew P. Our boy.
There we go. Justin, howdy. I feel the people watch crash videos because it reinforces their decision to not do the work or to not take action. I absolutely agree. Michael Jewell, howdy. Haven't seen Mike in a while. I have a lot of respect for religious people, but my family is a bunch of jerks. And I have some Catholics in my family who've disowned me because of some whatevers. So on Facebook, if you're friends with me on Facebook, I make some anti-religious jokes. It has nothing to do with you or your beliefs. Mike and I were friends, and then he realized I was picking on that religion. And it's not because of Mike or people in that religion, it's because of my family, because you can't pick your family. Michael Jewell, when are the 3 amigos going to become the 4 amigos? Good question. I'm open to it. This is a Zuber channel thing, so.
You guys all have significantly more experience and expertise, years of
you
it
have
that
current working experience.
I like the REI Avengers. If we want to do an REI Avengers once in a while, that's a great idea. But your Three Amigos show is the second most popular show on Mike's channel. You can't mess with the classics, you know. Just keep the group all together, and I'll just, you know, linger about when I get the chance.
Well, we need to do this more often. This next one, everybody.
Even the
going
Stooges
to
need
be-
to bring Shemp in every once in a while.
The next one of these live streams with the three of us is going to be on Millennial Mike's channel.
Oh.
Yes.
Now you know that, Mike.
All right,
Robert
I'll figure it out.
Ugliest town, first guest, Somersworth, second guest, Rollingsford.
First is, yes, it was Somersworth. Rollinsford's not the ugliest by far. Not even close. They're really smart in that town. They will not let you build on less than 2 acres of land. So it's like trying to buy here. The typical MLS sheet for my town literally is 4. The houses never come up for sale here.
The next is from Dom's Vibranium Bicep. I'm
Oh,
taking it you haven't seen pictures of Dom recently. What's up, guys? Howdy. Jernale, Mike, nice to see you on the live chat. Who does all your initial walkthroughs on potential deals? A specific guy or your agent?
Yeah.
As deals start to become more abundant, my agent has limited time to look at. Also wondering what your system is.
Yeah, that kind of goes back to an earlier question. I mean, if your agent doesn't have time for you, it might be time to make sure you have more than one agent working for you, you know, probably a bunch of them. And it's not, it doesn't have to be something that's controversial and, you know, or causing a fight between the two of you. Like, dude, you don't have time for me. I'm not going to miss out on the deal because you don't have time for me, you know? But yes, I try to get my real estate agent and my property manager through every property that I'm serious about before I even make the offer. Now, I can't always do it, but it's going to be at least one of them. I have always had somebody that I rely on and trust who is willing to give me bad news of, dude, you don't want this thing. Trust me, it's not going to be good. We can find something better. You want that person. You don't want someone who's just thinking of a commission check and they're not going to give you the bad news. So, but someone's walking through it that I trust, and ideally 2 people are walking through it. And oftentimes they walk through it together.
In the comments, I said we were wrapping up here and a bunch have come out after that. I'm not going to go through them all.
Oh, yeah.
There's been a few more, but a lot of them are thank you for doing this. I appreciate you guys taking the time to come on here and help me educate people like this. There was one in there that I have no fermented water in retirement, and actually it blasted for the first couple of hours. And the thing I want to wrap up with is the sponsor of today's video, which in most videos is Alien Vodka, who doesn't actually sponsor the videos, but makes it possible until your glass is empty. But none of us like our drinks to become watered down, especially when you have a Mountain Dew vodka mix. So the sponsor of today's videos, I'm putting in the chat now, and we'll put in the comments below after the video, is Bullet Ice Cubes. This is restaurant grade. You freeze them, comes in an easy container to freeze that looks like a speed loader. And you put it in your drinks so that your drinks stay cold and they don't water down your drink. So you can actually do a 2-hour and 3-minute live stream, very sadly run out of liquid that stayed cold the entire time. I want to say thanks to everybody who came and hung out with us today. I think the live streams will happen more and more in the future. They might get shorter, so it might be a little bit harder to get your questions in fast enough. So I recommend showing up early. We'll try to figure out a time that works best for everybody to do these. This was just a random, hey, let's pop in the middle of the day. Mike, if somebody wants to reach out with questions, how can they find you?
Forget subscribing to me. Dion is almost at 11,000 subscribers. I'm not even going to give you where my stuff is. Go to Dion's channel, like the video, and sub to his channel. He's like 3 people. You can look for me on your own.
I do 3. It's 3. It's 3 people off.
Just sub to his channel, guys. You will be able to say, I supported Dion before he even was over 11,000 subscribers. He's going to blow up and be big one day. Don't you want to be part of the under 11,000 subscriber crew? I do.
That is another comment that comes up below after where we were wrapping up, where somebody says they appreciate this time that we share. They like getting their questions in, but they know that someday our channels are going to get so big that we don't have time to answer all of the questions. We all share our emails. We all do multiple lives. I think that will continue. And sometimes there will be a way to get a question answered, like Dividend Dave emailed me today. I'll be making a video on his question. So sometimes that's the easiest way to get something answered, is reach out to Millennial Mike here on YouTube. His channel is Millennial Mike. Matt, if somebody has questions and wants to reach out and get a hold of you, how can they find you?
Lumberjack Landlord on Instagram, Lumberjack Landlord on YouTube, and Dion, I think I just got you to 11,000.
Oh, you finally subscribed to my video channel? Let me see.
I'm refreshing your YouTube.
Oh, it went up
page.
one, so there's 2 now. You got me there. You got me closer.
No, you should have 11.
Oh, it says 11 for me. I can see it on
Yeah.
YouTube on PC.
Okay, well, I'm at 998.
It's my boy right there.
All right, hold on one second.
Now
Your other
Matt,
accounts?
Matt, if you unsubscribe, that's a low
998.
blow.
So
bro.
close.
No, I just subscribed again from another one of my accounts.
I was gonna do that and see if from my other accounts I could super chat myself for the algorithm, but that's cheating.
So yeah, so look, you should be at 11,000 now. I should have taken care of that for you.
999. We're that close.
Come on. All right, hold on one second.
How many accounts do you have?
That's not important.
999. It's coming. It's ticking slowly.
That should
What's
have got-
funny is I see a lot of channels that grow, but they don't get views on the videos. They get 400 or 500 views.
Yeah,
and
bots.
they have 30 or 40,000 subscribers. I'm always afraid of that. I want to make sure that the content we share is good enough to get people to come back and view it. I appreciate the people who subscribe. I really appreciate the thumbs up. I appreciate the comments. Each time there's a comment, the super chats help. It pushes it out and tells YouTube, hey, other people like this content. So,
Refresh now.
okay. You guys don't go anywhere. I'm ending the live stream on YouTube.
All right.
Bye, guys.
Bye, guys.
Until my next video, thanks for coming to my Dion Talk.